Okay, everybody, looks like we are live again. Thank you very much, Captain Yanis. We appreciate. Give me a second, everybody is going to appear. There you go, not a problem. Thank you very much, Captain Yanis. Thank you very much, we appreciate. So everybody, don't bother, I talk to myself, don't bother. So just quickly, we were talking about going back in time, alright? And we said, okay, we are going to take the previous week. We are still on NZD-JPY daily chart. And we are going to take the previous week, right? Monday, Tuesday, Wednesday, Thursday, Friday. And we are going to zoom out because we want to understand why the market behaved like this. Make sense? Why I might not have entered, or why I might have lost pips and money. So the first thing we're going to do, we're going to zoom out and try to understand the big picture. Right? NZD-JPY daily chart last week. Why did the market go up for 3 days and then reversed? Back to the future. Okay. Now reason number one, we said reason number one, it was well, the extension in some point in time it must retrace. Make sense, everybody? It cannot go up forever. So reason, the extension in some point in time it must retrace, right? Number two, and you are not going to like this, we were at the pivot point. Okay? Oh, but the market broke. We learned, everybody, that pivot points are not lines to the pip. So pivot point, okay, pivot point are not lines to the pip. So this market reacted pivot point, and really, you know, it reacted to. So we have and 3 clone 3, right, and clone, not this one, everybody, give me a second, edit label, number 3, you know, number 3 is double, once it's over, double tops. We have double tops. Make sense, everybody? So it's Friday or Saturday and Sunday, and I'm looking at the past week. It was over. I'm looking at the past week, right? And I'm trying to understand, well, why the market did go up Monday, Tuesday, Wednesday, and their Thursday, Friday, they reacted and pushed down. Here are the reasons. The reason is that in some point in time, the market, it must retrace. Because the yellow line, extension, retracement, extension, retracement, extension. Moreover, we've learned that the market are going to reverse at the pivot point, support, resistance levels, because those are areas of potential reversals. Make sense, everybody? This is how we learn. Exactly, this is how we learn. Then I need to go, once I understand this from the daily chart, just an example, then I can go on the 4-hour chart, right? And again, it was from, let me see, everybody, it was from the 17th to 22, 23. So 17th, April 17th, 14, 15, 16, 18 here, 17, 15, 17 to roughly 22. So clone, roughly 22, 22, 22, 24, 22 here. So on the 4-hour chart, this was the previous trading week, right? Now, here is the next question, back to the future. How could I, or how should I have traded this one, right? And again, NZD-JPY for the last week, it was sideways, so maybe it was not the easiest pair to trade for a beginner trader. Nonetheless, everybody, talking about the sideways movement, the market was moving in here, right? So, and clone different layers. This was the top, and in here clone different layers of consolidation. So it was in here, then it was in here, you know, and then it was in here. So how could I have traded this one? Well, back to the future. So if this was Sunday night, for some of you it was Monday morning, right? Not a problem. You can, exactly, you can say, well, I stayed out, cool, right? But how would you trade this one? It's not, this is an advanced pattern, everybody. Make sense? So number one, I can say, well, I could have, or I should have entered in here, buying this counter trend line break and taking the right up to here. Agreed, everybody? We have an, oh, but this is not easy. Agreed, it's not easy. Hence the JPY, it was not one of these spare to trade back. Today it's a different story, everybody. Makes sense? But back in time, in the previous week, we had enough data to understand that, you know, maybe, just maybe, this market is going to push up. And bam, this would be an entry, right? And then we see that the market is going out of the range. So this is over, this is over, this is over, over. And you say, okay, I'm going to wait for a retracement and I'm going to buy on the next one, right? So we would monitor the market. We don't have this one yet. Not yet, because the market didn't retrace. We are here most likely before. And we are monitoring the market, and something like this happens. Most likely we would not short the market in here. Or maybe if you are a day trader, it must be very skilled, you know. And going down and down and bam, and now we can see. So this is the end of the week. It was difficult, I mean, unless you are a day trader, this entry shorting the market in here, or a scalper, this entry in here, it was difficult to spot. Make sense? Maybe a system trade, yes sir. Professional traders, everybody, don't, what's the word in English? Don't compare yourself to a professional trader. Make sense? If the market was making higher highs, higher lows, it was in a wedge, broke the counter trend line, went up, out of consolidation, shorting the market in here, this is not that easy to do. I'm telling you, this is not that easy to do. How come? Why? Well, you have no reference. You have no reference. On the other side, the market just exploded out. It went out of consolidation. You have no reference. This is, everybody, a pure bet. Make sense? You don't have lower lows to show you that the market is going to fall. The market just made a higher high. Short-term traders, yes, the logic would be after the short-term extension, the short-term retracement must come. So this would be a retracement trade, right? Short-term extension. So we are highs and lows, highs and lows, highs and lows, or highs and lows. And you can say, well, this is a high, so counter trend line break, the market must retrace, so, and it's going to retrace to pass support. This is a retracement trade. Not that it's not doable, it's difficult to spot. Make sense? So this is the technique, and you can do the same right now. Maybe not today, wait, this was Monday, Tuesday, Wednesday, wait for this market to close on Friday, okay, and do the same. By the way, how are our positions? We are shorting AD JPY, we are in a profit. Shorting Canada JPY, we are in a profit. And shorting AUD CAD, we are still losing, everybody. Okay. So, hedge fund trader Alex, are you here? Alex, are you here? You asked for NZD-JPY. Hedge fund trader Alex, are you here? Otherwise, everybody, we are going to go on NZD-USD and we're going to do the same, right? NZD-USD, open. NZD-USD, give me a second, everybody. 4-hour chart, right? Okay, 4-hour chart. See, everybody, how this works? Moving up, moving down. Up and, yes sir, up and down. 1-hour chart, 1-hour chart, 1-hour chart, 1-hour chart. There you go, up and down, exactly, up and down. 1-hour chart is this. Makes sense, everybody? You can do this on the 1-hour chart. You can do this on the 4-hour chart. Make sense? Yes, sir. Back to the future. So we can do the same. We can go on the daily chart first. Okay, daily chart, and this is from the previous lessons. Daily chart, down to trend line bearish, whatever might be the case, right? And today it's what? Wednesday. So the previous week, Wednesday, Tuesday, Monday, Friday. Friday, Thursday, Wednesday, Tuesday, Monday. Right? So we are going to zoom out. You don't see the future. This is from how you apply to the technique from the previous days. Okay, you don't see the future, but you could be in here, and we are going to zoom out and trying to understand the big picture. Make sense, everybody? What is the big picture? Well, the market broke, so this is from the daily chart. The market broke, it was making higher highs, higher lows, higher highs, higher lows, made a higher high, relevant one, right? It broke the down market wave, but then broke also the uptrend line, the red one. Okay, so it broke the red line, the red one, and started to make lower lows, lower highs. And again, multiple time frame trading, I need to do the same, and I need to go on the weekly chart, and from the weekly chart I'm going to see back to the future that, oh, this market, even though it made a higher high, it's not relevant, and this market is still falling down. Make sense, everybody? So I'm trying to make sense out of the markets. Okay, you know, maybe the market, you know, it was pushing down, the weekly controls the daily, this high, it's not a relevant high from the weekly, and because this high is not a relevant high from the weekly, the market pushed down. And especially because the market broke the uptrend line, making lower lows, lower highs, it makes sense to me to short the market. Agreed, everybody? And again, then you move on to the 1-hour chart, right? 1-hour chart, and we go again 17, April, 14, 15, 16, 17. Now we're on the 1-hour chart. 17 to 22, 23, 22, 20, 22, 8 of 22. Right? And we are here on the 1-hour chart. 1-hour chart, and let's say that we lost or we didn't trade, right? We still are not confident trading, you know. People that initially clicked on the notification and watched are not back. We had 20 there, strange. Not a problem, boss. They're going to have the recording. Did the platform go down? I'm not sure, Alex, maybe the OBS. But we are going to repeat the fight in the end, don't worry. Okay? Don't worry, everybody, the message was on in the first part. Now we're going to repeat the message in the end. Okay, everybody, so we are here, and you say, well, I stayed out because I double guessed, I triple guessed where or how I should have traded this one, right? And again, we are going to zoom out. and we're going to try to understand how this market works, and we're going to see that if we zoom out, that if we had our analysis right, extension, retracement, extension, retracement, extension, retracement, extension, right, and then retracement, we can understand from the market that, well, this was really a nice entry, right? Because we learned from the previous lessons what is going to determine the retracement or extension is the change in the short-term trend. We have an auto end when traffic disappears, that is why it ended. Thank you very much. So high to low, low to high, high to low, low to high, high to low, low to high, high to low, low to high. The market was making lower lows, lower highs in here. Let's color code this in red one. And then the market start to push up. Higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. Agreed, everybody? So we could and we should. Yes, it depends on the strategy. We could and we should do what? Well, what we have learned, just an example, counter trend line break and counter trend line break and another one, counter trend line break in here, right? So step by step, back to the future, I can see that really, wow, you know, maybe too soon, but the next one and the next one, I can see, everybody. Do we agree that the market was making higher highs, higher lows, and then start making lower lows, lower highs? So there is a change in the short-term trend between the green one and the red one. I went short on NZD/USD. Carry on, guys. Thank you, Captain. I told the guys the message. We're going to review the message again in the end, okay? Everybody? So is there a difference in the green one and in the red one? Mohammed, we need it short. Exactly. So once you study the market, and I'm sorry guys, I know the stream went down. Hopefully we are going to connect the first part to the second part and make it one video. Okay, so you can download and rewatch over and over and over again. Today we are talking about the back to the future technique. How to understand how the market works. Okay? So I can see, wow, you know, the market really on the 1 hour chart, the market really did the lower low, lower high at the pivot point, and this should be my entry. And then the market reacted, went back up, you know, and then another one, another counter trend line break, right? Another counter trend line break. And then it went down and another counter trend line break in here. And until Friday, everybody, until Friday, another counter trend line break. Make sense? This is Monday or Sunday night when the market opens, and this is Friday. Friday night, Friday market is closing. And I can tell myself, oh, you know, this is really what I should have done. This is really what, wow, that I should enter 1, 2, 3, 4 times. And I didn't. Some of you are sending emails, everybody. How can I increase my confidence with this technique today? Once you are going to study the charts and clarify to you what happened in the previous week and why did it happen, then this is going to start to increase your confidence. Make sense, everybody? Because it does make sense. One more time, yes sir. So one more time, everybody. Do we agree that, everybody, do we agree that from the weekly chart, everybody, do we agree that from the weekly chart the yellow line, the market wave is down. Do we agree that relevant highs and lows are down, everybody? The market's making lower lows, lower highs, relevant ones. Do we agree on that? Yes, okay. And do we agree, everybody, that even though the market on the daily chart made a higher high, that this downtrend has continued, or it's continuing? So the market made a higher high, sure enough, but this high, it's not relevant. Do we agree on that, everybody? Why are we looking at the higher high? Because on the daily chart we are seeing a counter trend line break like this. On the daily and the 4-hour chart we are seeing this one. And some of you might not have traded. You got scared to go short. I'm not going to go short because by the higher high this market is going to push up. Well, no. No, who is stronger? Is the market wave stronger, the relevant highs and lows, or is the short-term downtrend stronger? Who is stronger? And even though the market made a higher high, this higher high, it's not relevant to the downtrend. It's not relevant to the big market structure. Make sense, everybody? Okay, now from the daily, higher high, yes sir, but the trading week started in here. Our trading week, everybody, started with this vertical line. Sunday night, Monday morning, this is the vertical line. So this is what you see. And if you learn how to understand the market, how this market it's moving and working, and it's predictable to a degree, you would see that, okay, it might, yes, it made a higher high, but then the market broke this low. The market broke this low, right? And it broke the uptrend, so there is a great chance for the market to fall. Agreed, everybody? Shiro says yes. Alex says makes sense. Thank you very much. And then Monday, Tuesday, Wednesday, Thursday, Friday, I did not enter, I did not trade because I was scared. How many of you were scared of the higher high? How many of you were saying, oh, the market broke the uptrend line, but it made a higher high, and now the market is at past support and it's at the pivot point, so I'm not sure, right? And then you go on the 1-hour chart, 2-hour chart, 4-hour chart, and you micro-analyze the chart. You study the chart. Say, okay, this was Sunday night, Monday morning, and I should have monitored the downtrend. I should have monitored the price action, and I can clearly see that if I should have monitored the market making lower lows, lower highs, then I should have seen that the market stopped making lower lows, lower highs, start making higher highs, higher lows, and in some point in time start to make lower lows, lower highs again at the pivot point. And this was the signal for me to enter. And if I would have entered, I would won once, twice, 3 times before the end of the week. Just on one currency pair. 1, 2, 3 in here. Make sense, everybody? But I was still scared. You need to trust your education. You need to trust your education, everybody, that somehow, as a cliche quote from Steve Jobs, that somehow the dots are going to connect in the future. But you should really trust your education, everybody. So if you see right now this kind of setups, go on the daily, go on the weekly. If you need to, go on the monthly and try to make sense out of direction. Okay? Like in here too. Make sense, everybody? So for today, this is a technique, it's called Back to the Future, how you can analyze 1 week for another week to another week. You know, if you are losing or if you are not entering because you are scared, this technique is going to help you to better understand how this market works. And remember, our job today, it's not to make pips and money. Our job today is to understand how this market works. Everybody, never forget what I'm going to say to you today. Confidence in trading comes with the understanding of the market. The understanding, Brazilian guy talking English, the understanding of the market comes with education. Never forget. If you are not confident, everybody, if you are still scared, some of you are scared after 1 year, 2 years, 3 years, confidence in trading comes with the understanding of the market, how this market works. Good news for you, everybody. Well, there are two good news for you. Good news number one, trading is absolutely a learnable skill. Good news number two, this market is absolutely predictable. Not 100%, but it's predictable to a degree. Makes sense, everybody? Because this market specifically does the same thing over and over and over again. Alex, using your lesson, my demo account is making money. Without you, I would have not made any money. Thank you, Freedom. Thank you very much, Alex. Keep going, keep learning, keep increasing your consciousness and help others, Alex. Shiro, but how to deal if we met with triangle pattern? Easy answer, Shiro. Every single pattern has its own entry rules, stop loss rules, and take profit rules. Make sense, everybody? It doesn't really matter what pattern are you trading. Uptrends, downtrends, crowns, pennants, whatever, triangles, you know, whatever might be the case. Every single pattern has its own rules about how to enter, where to enter, how to manage the trade, where the stop loss and where the take profit. And nonetheless, everybody, so today we are in a fight, okay? I need your help, everybody. We said this in the beginning, I'm going to tell you one more time, okay? Please go to, you have the link in the chat, everybody, or if you don't have it, I'm going to post it one more time. Go to this link, I'm going to put it on the chat, and write an honest review, okay? But say something good about notifications. Make sense? They want to take out notifications from the platform, okay? Write an honest review. This is mine, you know. I wrote my honest review, you know. Dukascopy has one of the best free educational content. You can choose from a variety of topics from a beginner to an advanced level. And in this busy world, so this is me being honest. In this busy world, what helps me a lot to remind myself is the daily notifications. Grammar error should be R, but okay. Thanks God, good. Thanks God, daily notifications are back. And don't fall prey to stupid people telling you otherwise. The unsuccessful are always blaming the broker. Okay? Please, we need your help, everybody. Go to Trustpilot and see in here, this is me, Michael Comarella, this is me. Click in here and write an honest review. Okay? But mention notifications. Say something good about notifications. Okay, everybody? This is the fight today. I post my review already. Thank you, Alex. If you have some friends that are on Dukascopy, ask them to write an honest, you know, I mean, if you think it's 5, click 5. You think it's 3, it's 3, whatever may be the case. Be honest, but write something about notifications. Okay, everybody, if not, they're going to take notifications out of our community. So we are fighting back, right? Okay, everybody, our time is up. See you back tomorrow with another Forex Trading Week lesson. Until tomorrow, let's fight back for our right to be notified about education. Okay, everybody? Until tomorrow, stay strong and fight for freedom today, everybody. Don't rate fight for freedom. Leave your review on Trustpilot.